Hey everyone. So Seth Lejeune from the Millennium Podcast. I wanted to hop on here though real quick just to talk about PMI. And people associate this really as kind of like a dirty word, and it really shouldn't be. So basically what PMI is it's a slight insurance kind of hedge for a lender to add to your loan if you're not putting 20% down. So we have a full episode coming out about this soon, but I wanted to get on here and just kind of give you like the rundown and the bite size. So PMI stands for private mortgage insurance. Historically, 20% was the standard back in the day, but as loans and economics changed, they started to allow to put less money down in order to purchase a home. And when you put less than 20% down, typically, sometimes when it's 10%, you can still waive the PMI depending on certain loan factors. But generally what happens is that the PMI is added to your monthly payment, and it's usually a very small amount. It's depending on the purchase price and the risk factors. But a really interesting topic that we're going to discuss at length in another episode, a longer episode, is essentially, is it worth putting 20% down to get rid of this small monthly payment? And it's all kind of over the map. Some people just want to put 20% down because it's 20% and that's just what they want. They want to have 20% equity in their house when they buy it. Some people just feel it's the right thing to do. It's a smart investment. But there's a lot of people who can't put 20% down, and we understand that here at Millennium. So I wanted to give you just kind of a little bit of a primer as to what it can mean for a family that doesn't have 20% down, but really doesn't want to pay the PMI, and what that can mean. So PMI is essentially a way for a lender to reduce risk in the event of default. So it's almost like they collect a little bit extra just in case they ever get left with the property and the borrower is unable to pay. And I advise personally, I don't have a lot of 20% down buyers, not in Philadelphia, because a lot of people are making the conscious decision to hold on to their cash. So we're going to talk about this again in a larger episode. And Jen, my co-host, has a ton to say about this, but wanted to just get on here and just give you a little bit of a bite size of what private mortgage insurance is. I personally think that it's worth paying a little extra every month and hold on to cash for your HVAC, vacations, put that money in the market, do something else with it. And so, but everybody has a different stand on like exactly what they want to do with it. And a good lender and a good realtor is going to talk you through this and ask you about, hey, does this purchase actually advance your financial goals? There's a lot of lenders, a lot of realtors out there who are going to say, oh, no, 20% down, that's the safest way. That's the way you should do it. A lot of lenders will tell you not to put 20% down, and they're nuts. I don't know about that. The economics are a little murkier these days. And I'm not sure with these rates as they're considered high, but they're historically not that high. I'm not so sure. You keep more cash in the bank and you pay a little bit more per month, and that way you can have money to go out and do other things with it. What do you think? Leave a comment. Let me know what you do. How did you buy your property? Did you buy it with 20% down, or did you put it 10% down and you have PMI?